Good morning, everybody. Happy Thursday. It's November 20th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We bring this to you every Monday and Thursday, roughly around 8:30, 8:45. Talk a little bit about the markets, about what happened, what's going to happen, perhaps data, talk about earnings, anything that's on our minds that can help us get an edge into the next couple of days of trading. So, obviously, markets are ripping higher this morning. You can see the S&P 500 up 105 handles. That's better than 1.8% this morning. NASDAQ up better than 2%. Boy, that's quite a run for NASDAQ. We'll get into that in just a moment. The Dow Industrial is now up about a little more than 1%. It was lagging earlier, only up about 0.5%, but close to 1% right now, about 400 points. So clearly, the what is the driver of earnings for this morning? It's clearly Palo Alto Networks, right? That's the one that's driving the markets higher. No, I'm kidding. It's NVIDIA, right? NVIDIA had powerhouse earnings last night, guided higher, guided margins higher. They did everything that people expected them to do and more, and is helping to stoke a nice rally this morning in the futures. And of course, let's not forget where we were just a couple of days ago. Markets were getting smashed on Monday and Tuesday, right? And so we're literally just getting back what we lost from those couple of days. So if you look at it from a net basis from last Friday, we really haven't gained much ground. I could say that perhaps the sentiment fell a little bit too far and got a little bit too sour to the downside earlier in the week, and maybe that earnings report from last night is going to improve sentiment and get people off the sidelines again and get them back into the markets here before a nice run into the end of the year. And of course, that means that we're going to have some resistance levels to get through. Those are going to be quite challenging over the next couple of weeks if we are going to move up towards these all-time highs. The all-time highs came in just under 6,900 on the S&P 500. We're going to be probably, if we open up here, maybe about 150, maybe 2.5–3% below those all-time highs. So it's not insurmountable. I think we could certainly get there. I've been targeting about the 7,000 area by the end of the year, slightly below it, perhaps. But those are just guesses, of course. Volume levels have been rather low. We might see some good heavy volume today, and certainly we'll see some heavy volume tomorrow. And why is that? Tomorrow is an expiration Friday. We often see heavy volume on these expiration days, and this one is what they call a double witching. It's not the triple witching, which is what we're going to have next month in December. This is a double witching, which we have options expiring and then futures on options on futures expiring tomorrow as well too. So that'll create a lot of volume, a lot of activity, and also volatility as well too. Speaking of volatility, we can see the VIX is just getting smashed this morning, right? And why is that? And that is because when news hits, the volatility starts to sell off, and because that news is behind us, and now it's time to look forward to what's next, right? So once the news of NVIDIA's earnings came out, and once the news of the jobs report came out, I'll talk a little bit of that about that in just a moment. It's time to move on to the next worry, right? And the next worry may be more data coming out of the next couple of weeks. It may be going into next week with the short trading week and people focusing more on selling volatility in front of the holiday short week next week. And then we have to deal with the Fed meeting, which comes on December 9th and 10th. So I don't think that I'm surprised here that the market's up so much this morning, and there's some opportunities here. However, there's a lot of these stocks that have been hammered. New highs versus new lows have not changed from the bearish signal that we've had. I can show you that right now. This is one that we look at from time to time. It's the new highs, new lows. You look at that chart there, and you can see that it's been printing negative numbers for the past 7 or 8 days, below zero. And we also printed 2 times below 100. And of course, according to my good friend Larry McMillan, that is a sell signal on the breadth and on this particular breadth indicator. I also wanted to show you the New York Stock Exchange McClellan oscillator, which got to a moderately oversold reading yesterday. I mean, at the lows yesterday, we were at like a minus 185 on the Nasdaq. We were like a minus 245, 265. Now it could go a little bit lower than that to get to an extreme level, but it was fairly oversold and due for a bounce. You can see where the NYMOT was yesterday. It closed at minus 127, the day before minus 140. And you're kind of when you're in this zone here from about minus 120 to about minus 150. That means it's kind of primed and ready for a bounce that's not really announced, right? So you know, if you're just ready for that, then you can do it. Then obviously clearly to the other side, if we're overbought here up in the 150 area, 160 area on the oscillator, it's time to start taking money off the table. So we're clearly not there. We haven't been up into that 150 zone, gosh, since back in July. Crazy, right? It's been a while. It's been 5 months since we've been in that way overbought area, according to the oscillator. So much more narrow range, lower range and narrower range over the past 5 months. Simply means that there's the breadth has been horrendous, right? And I've been talking about it for a while. We've talked about it in the chat room and elsewhere, some articles I've written as well too. So the breadth has been just horrendous for the past several months. Can it improve? Sure, it might improve coming up in 2026, or it might get worse, might stay bad. So we pay attention to that. The breadth is a very important indicator to tell us where money is being put, not spent, put into the markets, right? So we'll take a look at those indicators from time to time over the next several months. So as it is, this big rally this morning, if it sticks, is going to put us back above the 50-day moving average on the S&P 500. S&P 500 currently sitting at 6642. 50-day moving average at 6712. If we open up right here, would be about 30 handles above that 50-day moving average. So as I always like to say, I like to have some kind of confirmation of a move. So if this is a big move and it sticks today and we don't sell off below that 50-day moving average, which means we don't close below about 70 handles today, then I want to see some confirmation tomorrow. I want to see some follow through tomorrow. I think the internals are going to look strong today, obviously, for most of the day. The VOLD, the ADD, the ADSPD, some of these breadth indicators, intraday breadth indicators are going to be strong all day long. We're going to see lots of buy programs as well, too. So the ticks are going to be strong. Volatility, again, getting smashed here. Oh, which, by the way, volatility on a buy signal right now, and certainly that could be an excuse to get long. Some SPY calls, maybe even some NASDAQ calls as well too. So not much after the close today. We have the gap. We have Viva Systems, VEEV. Intuit is going to be posting earnings. We have Ross Stores, ROST. One of my favorites is going to be posting earnings. Copart, and tomorrow we'll have BJ's Warehouse, I believe, is going to be posting, and then also a couple of smaller names as well too. So we're moving into phase 5 of earnings season, and which means that we have 2 more phases, phase 5 and 6. These are just my characteristics of earnings season. Phase 5, fewer earnings, fewer big earnings that are going to have an impact on the market. So when we get into phase 6, it's even fewer names than that. That comes out towards the end of December, and then of course we have the holidays coming up, and we normally have subdued action during the last 6.5 weeks or so. I will tell you that some of the best trading will happen for the next 3.5 weeks. The last couple weeks, I think it's going to be very, very difficult, very challenging. You get a lot of people leaving their desks for the last couple of weeks, and you have a lot of erratic price movements. and it makes it very difficult. We may be going up and down, but at the end of the day, you're just not moving anywhere. And if you're buying premium, buying calls or buying puts, you're just going to get chopped up over there. So these last couple of weeks are going to be probably ones where I'm going to step back a little bit and do very little. I may do some trading here and there, but very little until probably until 2026. But doesn't mean you can't find any opportunities out there too. So we have a chat room going on every single day that I think it'd be a great idea for you to stop by and join us and see what we're doing. We're teaching people how to read option flow and teach them how to trade options correctly and responsibly and use good risk management tools as well. So hopefully you guys get a chance to see that. We have some probably going to have some nice deals coming up for the holidays. We do have a really hot one coming up for Black Friday. That's next Friday too. So anyhow, hopefully you have a great day. Trade well today, and I will see you guys all back on Monday morning. As always, raise some cash, take some profits. If you have some profits on some of these, some of your names that are popping today, hit the sell button. There's nothing wrong with that. Nobody ever went broke taking a profit. Hit the sell button. It's easy to do. And if you need help finding it, let me know. I'll help you find that sell button. Appreciate all you spend a little bit of time with me, and we'll see you guys all back on Monday. Have a great weekend. Trade well today and tomorrow, and enjoy the weekend. Take care. Bye.